But we are underway, and I do mean underway.
I wonder why fund managers can't beat the S&P 500? Because they're sheep. And sheep get slaughtered.
We have concluded the following.
Because I know more than anybody.
Cold winter is apparently...
Ladies and gentlemen, humans of all types, welcome back to Pounding the Table, episode 59. This week's been an absolute doozy in the week, with Pfizer having to share their vaccine data, quickly overshadowed by Roe versus Wade. And then, of course, today was a day that many had feared and bracing for because, of course, it was FOMC. For those of you living under a rock, FOMC is the Fed Open Market Committee, kind of like the Wu-Tang Clan, but with 12 members, which is led by the Fed chair, Jerome Powell. Each year, they meet 8 times to discuss whether there should be any changes in the near-term monetary policy, and of course, deciding the emotions of millions of people on FinTwit.
What's going on, everybody? Quick disclaimer here before we get more into the weeds. The thoughts on this podcast and our Twitter account are purely that of opinion and of our own personal investments, are not and should never be used as financial advice, recommendations, or solicitations. For those of you who are new, Pounding the Table is a podcast by Avi Mash and Anthony Ohayon talking about the stock market, the art of options trading, and each week we analyze the news and provide our opinions and insights around how we think the markets will be impacted. So Avi, finally just settled into New York, ready to kick it off, regular scheduled programming. Dude. So let's get it going. Yeah, I know. I'm literally like 6 blocks away from you. It's really weird.
I don't know why you moved here from Florida, because I'm trying to do the opposite, but welcome, dude. I'm super pumped to have you, and this will be cool to be able to pod with each other, even though we're like across the street from each other right now and doing it on Zoom.
Yep.
It's because
it is night. Yes, it is a late night. We're in the lab.
Before we get into the FOMC banger today, want to give a quick shout out to our sponsors over at StockTwits. Join millions of investors to talk about stocks, crypto, and a whole lot more. Where we get the pulse of the market. So head on over to StockTwits, join the conversation. We're not going to get distracted by trending topics like, what did Kim Kardashian eat for lunch? Everyone knows they only care like what I had for lunch, of course.
Exactly. Exactly. That's a given, Avi.
Anyway, so let's rock, man. So FOMC, what are these meetings? Like, what is it exactly?
Yeah, so every FOMC, it happens 8 times a year, like you said, and the Fed comes in and discusses what they're going to be doing in terms of how they will engage with monetary and fiscal policy, right? So we know that the Fed is in charge of 2 things, unemployment and keeping inflation at bay, which they have not been doing for worth a shit. But, this is like a pivotal meeting, and we've been talking about this for a while. And honestly, just to start off with like how important the Fed is, right? Really thinking about how much it's been impacting the markets, because that's really where that 2020 run-up came from, right? You had this extremely fast and extremely severe easing that continued for, quite some time. It was like over a year. And right now we're kind of winding that back. And we also have additional tensions from Russia and everything else that's going on in the world right now, gas prices, which affects that a lot. But just the Fed in general, they're the ones who have been responsible for our big rally, and also now are also responsible for this recent decline, and especially the big sell-off in growth stocks. And that's mostly because they are reverting back that policy. And thinking about, the speed and the degree at which they're doing that is really what most people are spending their time doing in the market right now. So as we said, like November, the Fed came out just unbelievably hawkish, was throwing the word quite quantitative tightening all around, and they had not done that previously. They had a pretty dovish stance before, and that essentially just means like they're not going to be super aggressive with tightening. They're, things have been very expansionary. They're going to keep it that way and not really put any pressure on that noose of the money supply. And, that meeting came out and it was aggressive, right? They were talking quantitative tightening, a bunch of different things, actively rolling off the balance sheet versus passively, and just raising rates, like what is just saying, like 8 times next year. And so that just was unexpected for the markets, right? Sent the growth markets into a free fall before the year ended. And then once the year began, and I'm pretty sure, because people wanted to not have to pay those end of year selfies and all those things. And plus it was not really moving its way towards the big soldiers like the FANG yet, which is why the market could keep running. But then it, continued to get severe in January, and additional pressures from Russia and from everything else that was going on with gas prices, making inflation overshoot like crazy, and rates getting out of control. You've got the Fed coming in with this meeting now after the last month, which is when they raised it 0.25%. So rates had been effectively cut to 0 during COVID, and then they raised them for the first time since they cut them all in the pandemic's crash. And now they just raised it again today with 50 basis points, so 0.5%. So we're moving up quickly back again to where rates were previously before the pandemic. And I think the Fed is basically making these huge moves that dictate how the financial markets are going to be moving in the future, right? Because we're really worried about this runaway inflation that's been continuing to happen. We'll talk about it later in the podcast, but the Fed is really the people that we've been looking for. For the Fed to change, it means they have to do something about the problems. They have to worry about unemployment and they have to worry about inflation, right? So we're getting kind of like this weird almost stagflation. We've got like not necessarily busing on unemployment numbers.
What is stagflation? I know inflation. Stagflation is a different word. What does that mean for those who don't know?
It is a different word. So, like the Fed's two goals, and this is what they've been doing all this forward. It's why these meetings matter so much. It's why everyone's saying, what's the Fed going to do? Or the Fed's messing this up, or the Fed's doing this right, which is less than the actual truth. But so their goals are to handle inflation and unemployment, like the labor market and then inflation. And so when you look at that and you see inflation is out of control and like the labor market, like unemployment is not phenomenal, right? So you've got like this negative double whammy, right? You don't want inflation too high and you want great unemployment, but you have both going the opposite direction. That's literally stagflation. I'm not like, we're really not necessarily in that, but I'm saying that like a lot of people are starting to talk about it being there because GDP last quarter finally came down. I was like negative 1.4% on that GDP. So they were expecting a much more robust economy, in my opinion.
Even in like real life, like I'm looking around, right? You're seeing prices, it obviously affects the housing market, like people borrowing money.
Right.
So like, is it like everything?
So, I mean, like money in this country and like it flows trickle down style, right? So it goes from the Federal Reserve, right? And then they loan regional banks and then those banks rank like they're regional Fed banks, and then they lend to other banks. And it just continues to trickle down and eventually hits you, the consumer, right? So you can assume it's like, how if you're building a pencil or whatever, maybe it costs the first guy 10 cents. And then the guy who's, all right, now I have like the lead in the wood, let me put the eraser on. And then it costs him, like he gets 5 cents. Everyone keeps making a little money on the end. And then the last person, who always is the case in business, gets screwed, is the consumer, right? Because you're paying the highest margin. So that's how it goes down, right? Essentially. And you just think about all the effects down the road or like along that line, like as you go walk through from the top to the bottom of the funnel and see how that goes. So that kind of goes into pretty much everything that happens in the world, like all the prices. And so if you think like lending has been extremely, extremely cheap, borrowing has been very, very cheap in the last, since the pandemic, since they cut rates all the way, right? So interest rates, literally the interest rates you pay, but not necessarily the same ones I'm talking about.
That's pretty much why all these VCs are throwing cash around the past couple of years.
Right. And it's starting to dry up now because it's like, if you think about like you were saying, how does that apply to the real world? Like, let's say you have a $10,000 debt and it's on your credit card, right? Like it's on your credit card, you're paying 20% or 15 or 18%. And that is like a horrible rate. And if you have better credit, you can get a better rate. And it works, that's exactly what I'm talking about. That's like the end of the funnel. And so the money comes first, through that, and then eventually it hits you. So like for example, exactly. Yeah. Just like that. Yeah. Sharp-face. Like if you're trying to buy a house, right? Like let's say like there's talked to like a couple guys in real estate recently, and they're just like saying that it's absurd, right? Like rates for your home's mortgage has gone up from like 200 basis points to 300 basis points to like 5. It's like, what's I think like 5.1% right now. So it's pretty egregious, but like you also have like extremely high home prices, which that's another thing that's just, like not really supposed to happen, right? Those are both like, it's not supposed to be like a higher rate and a higher price, like that fast for both, right? So something's going to give, and it's like, people are like wondering, when do you buy a home? You kind of figure out, like, I'm no real estate expert at all, but like if you're just, thinking of from really high level, just to kind of get a real world example of it, you notice that like if the rates are super high, right? Like say you buy like $100,000 home, rates go from 3%, your mortgage goes from 3% to 5%, like those payments every month. Like I was doing a calculation, just like teaching my brother how like a mortgage works, but right, it was like you're paying like 50 to 60% with the actual interest, and you're paying like 40 to 50% of your principal, because you're paying interest, you're paying property taxes. Like that's why mortgages take so long to pay off, because you are borrowing that money. You're like 50% renting and like 50% owning. And so if you think that your rent payment goes up a lot and your buying payment, yeah, it's nice because your house is going up now too, but it's not necessarily supposed to go like that, right? It's supposed to get harder to buy homes because rates are higher, because it'll cost more in interest. And if like your interest is like about half of your mortgage payment, it's going to impact what kind of house you can buy.
As they continue to raise rates, borrowing is going to become more expensive. So effectively, wouldn't that slow down how many people are going out there to buy homes and then supply?
Right.
Kind of slow down a little bit.
It's also like aggressive. Yeah, that's very true. It's also ridiculous because like speaking of sadly, there's like 300,000 homes in the market in the US and like 1.5 million real estate agents. So you've got very, very small supply. And then like, as we talked about in the pod, a lot of times, like people like BlackRock buy like 3,000 to 4,000 homes in a neighborhood and like, jack those prices up. And so it's like things like that just continue to compound. And so, yes, it becomes harder, but then you also have to think like, it's almost like a supply chain constraint situation, right? And you're kind of getting that now. And you'll see that people are going to have issues paying mortgages as they got that are like, variable, like back in the day and during the COVID deal or whatever they got. And like, you're going to see people are going to have also harder times getting financing to buy homes because your payment will be much higher. So like, if
no one's going to want to
rates are higher,
no one's going to want to move.
How are you going to refinance? You're going to go from, right. Are you going to go from 3% refinance for 6% or 5% right now? It's a situation where it's very finicky. Like that should theoretically mean that homes prices would go down, right? If rates are super high, it's harder to get money. It's harder to buy a house. There will be less demand because there's less eligibility to be part of that asset class, but it's really not happening right now. So you're getting home prices that are rocketing as well as that. And this is why people are paying crazy over ask. It's really like people are FOMOing NFTs that are flipping, going crazy right now. And they're like, I'll just pay whatever because I like this one. It's one of those like
I saw
constraints.
Like $180 million in gas fees for the Bored Apes or something.
Yeah, there's like 200 million. They botched it. Honestly, I'll get my thoughts on that later. I got to figure out if we want to partner with you, Gav, or if they want to. Just kidding. But like, I got some beef with that. I think that was a bad move. But
let's get back to
real estate.
FOMC. Everyone wants to digest the news. What I found fascinating today was that everyone was saying it's going to be 50 bips, and everyone's still though freaking out, right? Everyone thinks it's going to drop. People are buying puts, etc. And so it was 50 bips. And it went up, right? It was like climbing the ladder to success, escalator style. A little shout out to Biggie. But what happened? Why was, even though it was anticipated, why was the reaction different than what everyone thought, I guess?
Well, so I think that
I want to give Tony a quick shout out. Yesterday, 2 days ago, when he was at my house, he's like, dude, it's gonna rip, it's gonna pop up here. So I gotta give you a shout out on that one.
I appreciate it. I mean, I've definitely had an egregious amount of shitty calls. But regardless, like you're there when it matters. Like, and I think it's funny too. I was like talking to Rahul. He's like, you only appear when the markets are either going to go up or down and they turn. So it's like at inflection points. It's like, yeah, because exactly what we said since November. It's like the only person who can fix this worth of shit is either Russia stopping and then Fed can like handle it. But it's still at the end of the day, it's Fed. It's really all about the Fed. So since November, in January, I thought mostly Fed, but then it was exacerbated by end of year taxes. And then also it was that hawkish meeting in November. And I was like, okay, well, it'll get January flows and flow back. And so that's where the adage of don't fight the Fed works both ways, right? Like I did think that it was oversold, but then obviously like a week later, you realize it's not going to get changed until the Fed. So continue to hammer that point home. But right now today, like you started seeing that a lot of what people were predicting for the Fed was overly predicted, right? People were talking about 0.75% raises like in one rip. Like we had trouble in like 2018, 2019, raising like a quarter at a time. Like it was like, that's an egregious raise, but it's also like what the bigger fear is now is inflation. So like you're picking a poison, right? It's like, do we do that and just like jack the shit out of things and try to get back to normal? Or do we just like let inflation run off like crazy and then just like, I don't know what happens. Like it hasn't happened since like really the 70s. Mortgage rates right now are like where they were not since like 2008. So it's like,
look at Powell as kind of like the father. He's like, all right, children, like I know you guys want to have your fun, but like in order for this country to survive, we have to do X, Y, and Z. He seems more powerful than the president.
Since Trump left office, because Trump actually had an impact on the stock market, like you've noticed that that he has just been the sole proponent driver of the economy. Like he is deciding everything. I mean, not him specifically, just him, because he has other people on the board, right? But he being the face of it, like people have NLPs that like track every word he's going to say and trade based off of exactly like how as he's saying it, because it moves that quickly, right? So he is like watched like a hawk. So it's very important. And since that November meeting,
even the Tony says things like
right, exactly. That's what NLP is exactly.
It's like it's crazy. Like
yeah,
how you say something could move billions of dollars.
It literally just like as he's saying it, read his expression, read his thing. And like also, every meeting we kind of see the difference of what he said the last meeting, because it's roughly almost identical, but it's a few words are different. So you kind of see exactly where we're at right now.
Yeah, it was wild. You were showing me this, and it looks like it was like a legal document with a few red lines, and it was 30 words different than the last time.
Right, because it's mostly the same every time, right? So it's like you've heard, how many times have you heard, we will continue to use the full force of our tools to like, how many times have you heard that from Powell?
Right.
Like a billion, right? So that was like, that's your narrative. Like that, there's a narrative that they push every time. That was the narrative he pushed for a long time. And then November, he pushed a different narrative, and then he's walking back a lot of that narrative. And so today, I think the markets were, first of all, we've been selling off since 4,700 straight. Like it's just been consistently. So we had a few pops, whatever, this and that, but it was just systematic liquidating, right? And you can see, you can go look at like almost all the indices, and you can see it bounces up the next day to right where it's like on that, like just literally downtrend line. It just bounces and just stays under and just keeps selling. And it was just waiting for the Fed, and everyone was like really worried going into the Fed because they're saying, Bullard was talking, all these guys were saying, the really hawkish guys were like 0.75, we're doing that, like it's coming, we're going to do quantitative tightening actively, and all these, like very actively, like aggressively actively. Everyone was thinking that all these things were going to happen. But that means everyone's really short, everyone's really hedged, and that's like, as we talk about mean regression, it's a reflexive property. And so it's you can get caught offside from those situations, right? Because you have so many puts, your puts start to die, things rally, people try to sell them. And as we always talk about, like options are a huge part of the market, and then like market makers buy and sell shares to be delta neutral with that. So it moves the market when people are betting. And so you have this possibility for reflexive moves, and kind of got one today because during the FOMC, he said a lot of important things, but the most important things he said is just, June 1st, balance sheet runoff start really. And then the runoff is going to be lower than expected. And then so you're rising also to 95 billion in September for that. So you have a lot of different things that they're saying that, we were expecting worse, right? And so inflation controls, right? Like because it's going slower, right? Just by knowing that as they tighten, inflation theoretically just goes like down. The more they tighten, it's a little bit more delicate than that. And Powell was alluding to that by his choices of being way more dovish than he's been for like since November. Like, I mean, it's just literally been like Fed's just been saying, we're going to absolutely just nuke it and just do whatever. We're going to fix this, and we're going to tighten as fast as we loosened. And that was what everyone got terrified for. And I'm not saying that they're not, like they are tightening extremely fast. They just raised 50 bips today. Like that's crazy. What's interesting is the price action.
So earlier this morning, I was reading this amazing article, Pantera Capital, and they were talking about like the 50 bips is nothing. Right. And I tweeted this twice today because I'm still not excited about this economy whatsoever. And maybe I'm wrong.
Oh, yeah. No, you're right. I'm also not
sleeping with two eyes open because they were saying Fed chair acts like he's pulling out the big guns, but maybe sometime in the future, increasing rates 50 bips. Inflation is 17 times higher. So he was saying it should have been like 500 bips 6 months ago to tame the housing bubble that the Fed directly created. They continue to go on. He said, I met with an investor recently who had said he's not doing anything in normal markets. All he was doing was trying to buy as many homes as possible, take out 30-year mortgages against them. He goes, yeah, with the nationwide housing market running at 19.8% and the Fed still manipulating the mortgage rate down to 5%, the Fed was basically daring you not to buy a house, right? And so I'm thinking like BlackRock, didn't BlackRock go in and buy like 40% of the houses or something?
Yeah, they did a lot. In certain areas,
they just invested 400 million in USDC.
Yeah, they're I mean,
all right, BlackRock, I'm on to you.
But like, I mean, like, I'll tell you, exactly, they really are.
I'm thinking a little bearish, but like today, thinking back, you were going nuts and you were texting me over and over again. You're like, no, let's go, 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 go. And I was like, what is this guy talking about? Because I was like, I'm looking for work. And you're like, he said it. And like, he said it because he said he wasn't going to go to 75, right? That was very distracting during the workday for me.
I mean, you know how we always talk. Yeah, I know. I'm sorry. It was really important. I mean, so you know how we always say like, it's always about like the narrative. And you say, if you have 10 bad stories, one good story makes it better. You have to get better to get better. So we've been over here just basically every day. It's just been more shit. And it's just like looking worse from what he's been saying and how aggressively they want to do this. And so everyone was expecting him to just come out and do it again. And so instead, he had this more light approach, like lighter than what we expect. It's still not light, but it's lighter than what we expect. And so they're saying that 75 bips, 0.75% Fed funds rate hike was just not necessarily going to be on the table. And so they're saying that there's going to be They said word for word, they said 50 bips increases should be on the table at the next couple meetings. But did you hear that though? But like should be on the table instead of actually like gonna fucking happen. So think about that for a second, right? Because every time I have all these notifications on.
Wouldn't that be negative though? Because like he says in a couple meetings it could be 75 is not in the consideration right now. It should be 50 for the next, but like doesn't the should be worded? Doesn't that?
No, I mean it was like it because the expectations of you. Like if you think about like the reason I sent you that doc of the differences is like the minute details matter. It's not like they write this shit out. It's planned. They're not like willy-nilly saying things a certain way that they don't want it to be said. Like it is looked over, thought over, every word, every answer, right? Like this is prepared. So they do it all on purpose because that's the only way you can craft the narratives, by having a perfect story. And so what they were saying here and what they were doing here and now saying here are different things. So I get these notifications all day long where it's like, because the Fed's been talking crazy. And they're just saying like different members are saying different things. People who are usually softer or super hard, like Powell is like the quintessential example of that. But you're getting people saying we have to raise this many times. We have to do 50 bips rate, 75, all that stuff. What Powell says is law. That's it, period. And so he was saying 75 is like not on the table right now, and 50 bips increases should be on the table at the next couple meetings, which means that we can maybe expect a 50 bips raise. We might get a 0.25%. It's back to being data dependent versus being, we're going to do this no matter fucking what. And so that's a very different, specifically crafted response than previous. And so knowing that expectations were worse, right? What happens when expectations upset goes the other way. It kind of appears that the Fed is allowing the markets to run and making expectations horrible, cutting, tapering, and then having it come back. It's just going to oscillate in that range until they get to a decent point in taper. And then now they're going to assess data. The Fed is back in the game by being able to raise that much and say all these things and the market not be fucking 3,000 SPX. I don't know where it's going to go from now. I'm absolutely not bullish at all. It's like way too, like not even, I am saying right now, I am not calling any fucking thing.
I'm just looking at some of the other macro events that could potentially be happening. May 9th is around the corner. That was Victory Day for Russia. And there's a lot of talk about like either ending the war on that day or their declaration of war on that day. So that could be a big date to kind of keep an eye out for.
That 100% is true, Avi, because Russia, and I'll give you like another, like this goes directly into the Fed. That is such a massive proponent of why things got drastic with inflation and CPI in the last few months. If you really think of it down, like I did a ton of research into how much oil actually impacts inflation, and it's ridiculous. Like I went like in the weeds, like I went like in different in the baskets and looked up the makeup and the price averages of like what it costs to make those. It's like, if you look at any chart showing oil prices over inflation, huge moves in oil cause even larger moves in inflation. So it's like an exponential like overshoot. And so you've got that happening now, along with everything that was going on with the Fed. And it was a very bad time for that to happen, which is why I was like, why didn't we not just release our oil barrel? Literally the second Russia said a word, we should have just done that.
So why is that with the oil? Is that because it's like everything that is made uses oil? So as the cost goes up, it's going to cause supply chain issues. And that's pretty much what we've seen more or less.
Avi, are you like a stock guy now? Yeah, I was pretty freaking spot on, man.
COVID guy.
Yeah, I mean, so like if you look at the actual breakup of CPI, which is like consumer price index, it's just a basket of goods. So that goes into everything. So if you're, my Gatorade bottle I'm drinking right now is plastic, and it takes energy to make this, and also plastic is literally like it's all connected. And so if it costs more to get a barrel of oil, and also know that like oil lags, right? Because you have to drill it, you have to refine it. So that's a lagging effect too. So even though oil just went from like 80 to like 130 because of Russia, just spiked aggressively, that feeds into absolutely everything. So like that overshot inflation by a lot. And so I think that
Europe's aren't they stopping like Russia? That was kind of an interesting thing for them to say, like, we're stopping in 2 years. That's only going to piss Putin off more, right?
Right. I mean, well, like, so good thing that Trump did.
He's pointed at Finland, and I guess.
And Russia supplies a lot of the world's oil. Oil went nuts, and like more, it was going up regardless, but it went like crazy nuts as a result of that, right? Because like that war does that, right? Like that's what happens to prices and like the ability to get goods across, like that, especially people who produce a lot of those goods.
Go back to the NLP thing you were talking about that looks like red lines, right? So go through some of this, because I think what you're saying, that is important when 80% of the words are the exact same. And then there's certain key words. It's like they plug and play with Mad Libs or whatever that game was.
Yeah, I mean, I think what's most important is like just the weird subtle differences. It's like, you know how when you were in school and you were learning about like past tense, present tense, future tense verbs and shit, and like decisive versus like potential kind of things. Like I'm actually fucking tired now. It's as simple as this. Like when you were in school and you were like learning about just like English, right? Like just like how to talk, like you learn different tenses of verbs, right? Like you could say something happened or something will happen or something has happened, or you can say things a certain way and they sound a certain way and they mean a certain thing. And so like you look at these different changes, right? And so it's like one huge thing that I just like stands out to me very much. So it's like, in addition, the committee, and then initially they said expects, and it changed to decided, which means like a lot of people have been worried about the Fed not doing anything. And they're saying like, instead of expecting to do something, we've decided to do something. That is the main difference. You're like, why did we rally? It's the same notion of that. And so the sentence continues: to begin reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities. And then since they didn't have a date or anything, at first the sentence just read expects to do that. And now it says decided to do that. And then they furthered it with on June 1st. And then they said, as described in this document. And so they're starting, and there's a couple other ones of these, and like, we can talk about it more and post it or whatever, but it's basically saying that we're actually making moves. And so I'm not necessarily saying that this is like the best thing in the world, because like we also, you know, it's been one day, it's been like, I have no idea how the market's gonna react in a week or two, but knowing that was kind of the expectation going into it. And then there's the change, and then the expectation of 75, and then him saying no, that's why you had that big rally today. So of course you definitely need to see how this goes in the future, but I think it's in a situation now where it's like going to be data dependent, but once again, the data could be very shit, and it has been very shit. There's just an infinite amount of possibilities right now, because there's just like an infinite amount of data points that are going to be used to make decisions. And the Fed changes literally like all the time. It's like ridiculous. And so, you know, what they do and what they say are going to be different things, but I think that I'm going to stick with the idea that it's going to be this reflexive property where the Fed will taper into rallies until they're at a place where they feel comfortable not having to taper right now. And all of this, once again, completely based on the data that they perceive. But I think that there's a lot of psyops and like specific attempts at making the markets a certain way in order to do effective policy a certain way, and try as their best they can to do a soft landing, even if they are flip-flopping like salmon. And so far, you know, the market's holding over 4,000, and that means that they're doing a good job if you're judging it based off of price. I mean, if you're looking at like a bunch of like credit markets, everything else, absolute dog shit in bonds, but their goal is the inflation and unemployment first and foremost. So they're trying to tackle that as best as they can. They started late. Now Russia's involved and like impacting inflation through oil. But I will say also, oil was way higher last month. It was like ranging between 100 and 130, and it's ranging like 15, 20, 30 points lower on most days. So if you think about like how it's going to progress and where CPI will go, and now we don't just have one 25 bits rate hike that happened halfway through the month, and oil has come down a little bit. So like it doesn't give the notion that it could be starting to like better. Sure. Once again, though, this is like an unprecedented situation, unprecedented times in the market, and unprecedented moves in like so many different asset classes and indicators. So it will be data dependent. It will all be driven by the Fed. And until the Fed has decided that like, all right, we did good, it's chill, we don't need to taper anymore, or we're going to do exactly just this, and it's like, it's not going to get crazier, things will continue to be volatile as hell.
We didn't talk enough about Musk and Twitter and Tesla. He's been hilarious. I don't know if you saw him at the Met Gala. He was just clowning. It was hilarious. But obviously there was news, and in order to purchase Twitter, he had to sell some shares of Tesla. You know,
you were right. I was wrong. I got it. All right, you were right.
I just had to get that one in there.
Something like yeah, Tesla, for example. If you look at all the fangs are botched, right? Like Netflix down whatever 60%, Facebook was down like just 50%, Google, Amazon, all of them are down 30%. Like your biggest babies are getting fucked too. And so it's really hard to understand and see that like the entire market was taking a hit, because people always say it's the generals and the soldiers that fall, and it was. But you start seeing that like that, as we always talk about, that the markets are completely comprised of these like 6 or 7 stocks. That's why the markets were tanking now in this year, and those stocks were doing fine last year, and they started tanking this year. So it trickled down into them. And what's important is now like what is holding up regardless of all this shit, because this is the biggest important indicator, right? Like whatever is going and holding fine or like even going up now, unless it's like a play on oil or whatever. But if you think oil is going to be up in a year, I think you're kind of crazy. Like I could be wrong, but I don't think oil is going to be over 112 to 18 months. So, I mean, like you're looking at like long-term stocks that you like, even like Tesla, Elon sold what, like 8.5 billion or so in shares. So that's like a lot, obviously. And that just only brought it down to like 830. And then as soon as they tweeted that he was done selling shares or whatever it was, it started rallying, right? And it's like 950 today. And so there's certain, and the markets are still like only 4,300. So you look at like the propensity for certain stocks to hold and to go up when they should be going down based on macro conditions, especially like in the tech sector right now. Like you've got like CrowdStrike holding up just fine. You've got Mealy, which like, you know, Mealy and Shop are the same price at like 1,000 and Mealy is still there and Shop's at 450. And so you're seeing that. And you're also seeing another thing where you're getting certain shares that have been absolutely decimated, like Shopify, like what $200 billion company at the top, which was, I still said it was overvalued. I agree with that. There are other stocks that I thought were undervalued, but that were also obviously very overvalued regardless, because conditions matter the most. And so you're looking at those names and you're seeing like what is holding up now. And when the market does well, obviously they do the best, because if they don't go down, if you just think of it like buying and selling, right? It's like tug of war. It's just like tug of war. So you have how many sellers, how many buyers, that's the price. That's why everyone talks about all this other shit. It's just the price. And so you see that Tesla wants to go up. So then it likely has a good chance to go up when the market's going up. And so you see that Mercado Libre hasn't gone to 400 like Shopify did, and they were similar prices. Okay, so Mercado Libre is obviously a better performer than Shopify and a better name to own, in my opinion, as a result of that. And so you can start delineating which names might be the better leaders in the future when the markets get better and when the Fed situation, all this calms. And you can also start seeing which ones have already ran a ton in these bad conditions. And so if you assume that the market's reflexive and eventually will change back into good conditions, I'm not saying that's now. I'm saying that like we could keep crashing, it could still run like this. But if you think like 12 to 18 months out, assuming we have not an aggressively horrible landing, then that's also like a place where you start thinking, well, do I want to be owning all these oil names up this much? Or do I want to be like short crypto when crypto has been holding up infinitely better than all these other, like ETH and Bitcoin have been holding up better than every other tech stock. It's really better than Amazon.
Is that scary for crypto though? I mean, you could
Hell no.
look at the other way around and be like, well, they didn't shit the bed as much as stocks did.
These coins themselves, like Bitcoin and ETH specifically, because they're large enough that people who have actual money can care about them. Like they've been starting to be like constrained as well, like just like housing is, right? This supply constraint. And so you think like, you know, Fidelity just said that they're going to let you, you know, add Bitcoin to your 401k. There are only so many Bitcoin, right? And same, eventually they'll probably add ETH, because ETH is like only, I don't know, like 50% of Bitcoin market cap, and ETH is deflationary and will be more deflationary later. So you think about things like that, like sure, you know, they should have gone down a lot, but not that much has changed for them to be holding up this well since the last time. And so I don't think that the coins are acting like they want to go down. Like I know a lot of people are thinking that crypto is going to get absolutely massacred. And I would not be surprised for it to continue to be volatile. But just right now, as is, like the fact that ETH is one of the riskiest assets in a lot of people's minds, especially like institutions and like people who hold stocks up and who buy a lot of them. And the fact that last time in all this mess, it went down to 1,900 and now it's at 2,800. Like two things, you can say it's an inflation hedge, sure. But then you also realize that the coins themselves are becoming to be deflationary. So it's also expectation tier 2. And the fact that they're holding up better when they should have gotten murdered because risk got absolutely murdered, price again. And so I think that sure, we could have pullbacks when like inflation settles and people take the narrative off of it's an inflation hedge. But by then ETH has the ETH2 merger and Bitcoin will just be getting bought by people in Fidelity's 401ks. How many clients and how much money does Fidelity have? I mean, think about it. Like they only have so many.
It's crazy. I mean, I'm talking, there's so many institutions getting involved in the space and pouring money into it. And it's going to continue to grow, obviously. I don't know. I can see Bitcoin coming down again.
I wouldn't be surprised. I'm saying like, I don't really know what's going to happen when inflation settles and how the narrative's going to change with crypto. But I think by then, like we'll get a much better gauge on the way that people are like, not just relating crypto to general tech and then risk in general, because over time, if you have more adopters, right, like it spreads out the coins, less people are able to like more wallets every day, more people own a certain amount of Bitcoin and it continues to spread out, right? More holders, less propensity for one big guy to dump a ton, right? So liquidity is coming in, and also institutional liquidity, and right, and like you buy something in your 401k, what do you do in your 401k? Do you sell it? And you hold that shit. And so
shit up there daily, day trading.
Right. That's what I'm saying. Like we're like you'll literally be,
it's locked in there for
right.
a while.
It's removing supply that's possible to be bought, right? And so
Right.
if assets prices are based on supply and demand, less supply, same demand. Actually, less supply, increasing demand, price go up. That's just logically how I think about it. Like,
yeah,
is it going to be volatile?
Currencies
Yes.
will make it interesting to see what happens there. You know, they may want to crash Bitcoin and this is me.
What choice, bro? What the fuck can they do? What are they going to do? What is power? What is
they can create the central digital currency that everyone needs to use and just say it's banned. But even though it's essentially no one can quote unquote ban it, if the one with the biggest gun could tell you you're going to jail if they find you, and people will get scared, and then
Yeah, and you know what happens when people point a gun at you, Avi? You move out the way, and so people will literally go move to Switzerland and other places that are crypto happy, and you won't be having a lot of rich people and innovative people in the U.S. So that's exactly
what Manny on the pod, by the way. This guy's good luck. I just saw Manny walk in, man.
You're good, Manny. Avi literally was like, "Can we get almost 5 minutes away?" Super funny.
I was just thinking about like Elon Musk. Like he feels like on top of the world, and I was thinking back to like when Will Smith punched Chris Rock, and Denzel was saying like the devil comes to you. What do you say? At the highest moments, be careful. That's when the devil comes for you. Elon may break that barrier, but do you think too many things are happening where he's too much in the spotlight, and maybe he gets even more egocentric and starts tweeting, and it could like really affect and have that kind of Trump effect on both Twitter and Tesla and the rest of the markets? Like, do you think that is something to really think about, or am I just watching too much TMZ?
You need to get off the YouTube conspiracy theories, because I don't know. I'll have to say there's only one person in the world I will never say anything negative about, and it's Elon. Like, I don't give a shit what you think. He's done more for anyone in the world and everyone in the world than anyone else who's listening to this podcast ever could think about doing. So I don't give a fuck. I think Elon, no matter what he does, is going to do well. I backed him since I was like 13, and I will till I'm 60 and dead. Actually
61 first birthday.
Yeah, exactly. No, but exactly right. But like I think Elon is just like not doing it. I mean, yeah, he's having fun, whatever. But like, if you make $300 billion, I have fun too. Wouldn't you? It's like Stanford prison experiment.
Sometimes people have so much money they just don't even care what they say.
Yeah, but I think what is he doing? He's doing good things, right? How big of a problem
about what he says? He's tossed memes out there, troll AOC. Like he just does it strategically.
I mean, the reason he does that is I think that what's really interesting. He 5D'd all of us. And so, I mean, like, why do you think he's been, I mean, I know he's like that naturally, but the reason he chooses to be like that is like, he's definitely been thinking about doing the Twitter thing for a long time. And so like giving people the notion that he's a fun meme guy and everyone likes him and everyone on Twitter is crypto related and Elon's Doge daddy. I mean, it's all definitely in the plan. Guys in 11D, you don't think that it's all, I think it's all thought out, and he does it all specifically. It's also authentic, which is the best part. So I think he really wants to give free speech. I think obviously he thinks he's going to make a ton of money off of it, because he will, because everything Elon does makes a ton of money, period. And so, I mean, I think it's a good thing overall, because people want free speech. Avi, how happy are you that you're not going to be shadow banned? Like, I think me too. Yeah. So like, I mean, that things like that matter. And then I think that, if you just look at everything else he's done in the world, like who's done more? And I don't know how anyone can be thinking he's fallible at all. I mean, obviously man's not perfect. Everyone's fucked. But if you look at everything he's done nothing that I don't like in terms of where he's directing companies and what he's deciding to do with his capital. So I'm team Elon till the day. Honestly,
I would love if he was just trolling Twitter, and the deal doesn't go through. He sold Tesla at a peak and then can buy it back lower.
Yeah, exactly. I mean, I don't. He just, what's funny? I mean, he just got paid that. He bought Twitter for free. His options, his tier 11 and 10 got exercised for 23 billion. So he spent half of his profits and he put it in, he rolled it. Literally Elon's master roller.
Coca-Cola next.
And put the cocaine in it. Yeah, it's amazing. It's the best tweet. Second most liked tweet of all time.
Is it?
Yeah.
Let's end on that. Tony, wrap it up, man. As always, let's give people something to think about here for this next week.
Oh man, yeah. I would say, guys, obviously, we wait for the Fed, because the Fed is the one that decides it. And like until the Fed wants us to go up, or if the Fed wants us to go up, that's all we'll do. And so, today was a huge day, I think, just for, obviously the markets rallied like crazy and the Fed started showing lighter side of itself, but don't be fooled. Like, I would say that it's so freaking early. You can't call anything. You can't assume anything. They could just change their words tomorrow. They could completely change. And they already just raised 0.5 and they said good things because they raised 0.5 and they don't want to tank the markets right now, even lower. It's for like near 4K. So I don't know where they're going to go with it. I don't know what the data is going to be. And I also don't know what the data is going to be to them and how they're going to take that and improve it. So you have to really think about, many variables that'll come. So that's why I'm still saying, stay very agile, stay very, aware and open. I understand that, like, if things start selling, there's a reason. If things start running, there's a reason. But still, it's definitely far too early to call or think anything is better at all. Honestly, this could literally be down 100 tomorrow. Like, who knows? And so, yeah, expectations are better. Yeah, people were pricing on the worst, and there were so many people short. A lot of people got squeezed, and a lot of big buys today. Whatever, doesn't matter. Price can be super volatile, and bear markets always produce the biggest rallies. So this could be one of those, or it could be the start of the Fed actually getting a handle on that. But we'll need to wait for CPI. We'll need to wait for we need to wait for a bunch of data. We need to wait for a bunch of data and a bunch of random comments. Like, wait a few weeks to see what they're saying and how the markets react. But as always, the most important thing is watch price, watch all the prices, and then just figure out what's going on. And with that being said, we'll be back next week.
I just want to say one thing. Inflation is still 17 times higher. So sleep with both eyes open, folks. Be careful. Let's not get rug pulled. Have a great week, Pounders.
And we'll be back next week.
Big moves. That's a big move.
You don't understand how big of a deal the economy right now is. Like, it's so fragile that, like, we could literally upend so many things can be fucked. Like, it could be just irreparably bad for a long time.
Yeah. Don't talk about it. Master P, I'm about it. This one here for all that try to count me out and they still counting. Honestly, I never doubt it. Say the top is never crowded. Well, I'm trying to climb the mountain till I need a few accountants.
The only reason anyone gave a fuck who's in office was because Trump was in office. And Trump was a bad motherfucker who told Powell how he felt and exactly what to do. Politics don't matter right now. Like, Biden's not even making any. He's not.
Sense.
No, yeah. All right. Cut all this. Cut this entire fucking thing.